Hello, how do I find stocks that pay dividend? We are going to use Charles Schwab to look for dividend stock that we can invest in. So when you log into your Charles Schwab account, and it's charlesschwab.com, and on the home page you will log in. You'll put your login information, or if that's your first time, then you will create an account, open an account. So when you log into your Charles Schwab account, you will first be under account, and from there you on the top side, on the top bar, you will click on research. So when you click on research, you will, that's right, you will click on US market. And when you're on US market, if you have the option for the classic view, you will click on classic view. And in the past videos, in the previous videos, we found some stocks, some dividend stocks, so we are just going to continue. So under US market, you look for industries. We'll click on industries, and from industries we'll be able to find the market sectors. So you will scroll down and you'll be able to find the different sectors, and we are going through consumer discretionary, so we will click on consumer discretionary. But from this, you will select a sector, you enter that, you click on that sector, you'll find industries, and you'll pretty much click on the industry to find the sub industries. If they have sub industries, you click on that and you'll go through it to find the dividend stock that you're interested in, and you record it on your investment spreadsheet. And then you can just do the batch research. You can take one sector at a time and go through each industry within that sector to find the companies that pay dividend, that that met your requirement, and you record them on your spreadsheet. Once you have one sector represented in your spreadsheet, you can now apply other set of filters to them to evaluate each one of those companies that you recorded to see if they met your requirement for you to invest in them when you are ready to invest in them. So now that we click on discretionary, it's consumer discretionary, let's bring our filters that we set. So we are going to first find those dividend stocks. So we work on automobile components, automobiles. We are going to work on Broadline retail. We are going through each sector, and under consumer discretionary sector, they have multiple industries. So we are going through each one of them. The Broadline retail is a new sector. It was not there the previous time that we did this, and I should have the previous one, the previous list of sector. And as you can see, we do not have, I have to click on that one, right? We do not have Broadline retail in it. The third one was distributor, but this time we do have Broadline retail. So we are going to work on it. So that's a new industry that got added. So we'll click on the industry Broadline retail. It has 34 companies, and at this point you should have your investment spreadsheet ready as well, so that if you find something interesting, you can narrate to it. So how do you create your investment spreadsheet? We are just going to talk about the stock list tab. You might have a column for the company's name, a column for the company symbol. You might have a column for the market is sold on, the price is selling, the dividend rates that it pays, the annual dividend rate. And then we can have a trend, the sharp trend column. You'll have a column for 52 low, 52 high, and then you'll have sector, industry, sub-industries, and the year it went public as well. You can just have those columns, and pretty much there are criteria that you are going to use to filter down the companies that you will find in the stock market. So now that we have the spreadsheet available and we click on Broadline retail industry, it has one sub industries, Broadline retail. So we'll click on that as well. And under that sub industry, and you can see the flow: sector, consumer, discretionary, industrial, broadline retail, sub-industry, broadline retail. And it has 34 companies. So by default, Charles Schwab will show you other performance criteria, but we want to sort them by dividend. Therefore, we'll go to valuation and click on. When you click on valuation, it's going to pull the valuation criteria out for you, because before it was under performance. So when we click on valuation, we will see dividend amount, those criteria, and that's what we want. And usually it may not be sorted out the way we want it. So you will click on dividend. When you click on dividend, it's going to sort it out from highest to lowest. And now we have our companies sorted by the highest paid dividend to the lowest. You can quick scroll down to see if you have multiple pages to go through, and this one has 2 pages. So now at this point, you'll start applying your criteria. So let's go back to our criteria again. So we saw them by dividend, and let's go back to it. So now you can now read those company names, and when you are reading through them, I don't know how to say that, at this point you should know the minimum dividend rate that you will accept. So let's say maybe 3%. We do not want to go below 3%. So anything above 3% is great. And your criteria might change if you are looking into an industry or sub-industry, and you have a lot of companies, and maybe a lot of them are above 3%. Maybe by the time you reach 3%, you may not want to include 3% in your in your list, in your record. But anyway, so at this point we can say that we have 1, 2, 3, 4 of those companies that we are interested in, because they pay above 3%. So therefore we don't really need to go through the whole page necessarily, but we can skip through it to see what they have. So out of those 4 that we have, those high dividend, those that pass our first criteria, dividend, or maybe the second criteria, I don't know, but the one that pass our first criteria, dividend, are about the dividend, the minimum dividend rates that we said. We'll look at them and apply the second criteria filter to them. So as you read the company's name, you want to make sure you do not have LLC amount, the high pay dividend that you're interested in. If you have LLC, SA, SA, that mean usually that's international companies that have that. You can eliminate those if you are not sure that they are corporations. So I like to eliminate them because I want to invest in American companies first, and then I can do international one if I'm interested in some. So SA, I will eliminate those because I don't know if they are limited companies or corporations. So you want to eliminate LLC, partnership, LTD, LP, partners, SA. So we do not want those. What you want is INC, Corp, CO. So thankfully we have the highest paid dividend here is INC. We have Corp, we have Nordstrom is INC as well. So all the way to Macy's. So we have, so they all four pass the second filter of us. So at this point, we'll add them to our spreadsheet. So what I like to do is, let me see if I can make this a little bit small. So at this point, I will add the sector, the industry, and the sub-industry they are in. And I do not have Broadline retail on my spreadsheet because when I create this spreadsheet and I record those in it, they were now in the list. They were now that industry was not in the list. So what I'm going to do here for you to see is quickly, sometimes I like to copy. Let me see. So I will copy. I know I have Big Lot already on the spreadsheet, but it's under another under another industry. So for instance, I'll add Big Lot, and then the symbol will be BING, and what I can see is selling now at $8.31, and the dividend is and the dividend is 14.23%. So I will copy the discretionary down, and then I will have Broadline retail, and the sub industry has the same name, so I will add it here as well. And the second one is coal, and I believe I might have coals already on this spreadsheet, but under another industry. And coals is KSS. So you are not going to fill up all the criteria on your spreadsheet at the moment, but only the one you can see. And the dividend is 9.91%, and it's the same sector. So the next one is Nordstrom. JWN 14.61, 502%. And we have Macy's, I believe it's M 14.88. Yeah, I do not want to click on the snapshot. So if you click on it by mistake, you can just get out of it. 441. And I will just copy the sector, industry and sub-industry, and paste. And I can just make those white. Okay. And pretty much at this stage, you pull those high paying dividend from these sub industries, and you can just go through them to see what is out there. You know, we do have Amazon and the others, and we have SC, and you can go to page 2. Sometimes you can find high paying dividend on page 2 that didn't come to the page 1. And we do have an example here is I don't know if that's meaning so, Group Holding Ltd. That's an Ltd, so we are going to eliminate it. Is limited. It does not meet our requirements, so we are not going to add it to our spreadsheet. And that's pretty much, we are done with these sub industries. So now you go back to the top, you click on that industry, and if you have another sub industry, you will click on the second one. But since we do not have another sub industry, that's just the only one, we will get out of this industry. So we'll click on the consumer discretionary sector. So now that we have Broadline retail, we'll click on distributors sector. Distributor industry, it has 15 companies. And 15 companies, it has one sub-industry, and that's distributor. So we are going to click on the sub-industry as well to see those 15 companies. And under the distributors, we are going to click on valuation to saw based on valuation, not based on performance, but based on valuation. And under valuation, we are going to click on dividend to see the highest dividend. Now that we have it sorted by highest dividend, we have one here that met our requirements, and that's Waco Group Inc. So if you say 3% and up, that'll be the only one from here that you record on your spreadsheet. If you say something lower, then you might go through it. But anyway, so we can see, we can go through this list, and you saw an example of Ltd that we eliminated, that we didn't select, even though it has 10% of dividend rates. So you can go through them, and the highest paying dividend is 3.76. It's because the purpose of this tutorial is to find dividend stocks to invest in, to create a stream of income. So creating a stream of income through dividend stock does not mean that the other stock are not good to invest in. It's not the point. We want to invest in dividend stocks so that without selling the stocks, it can generate dividend as a stream of income. So by investing your money in those stocks from day one, you expect to have some stream of income from it while they have your money, and it is those shares that you have is increasing in value over time. You are expecting to generate some sort of revenue from me through dividend or in the form of dividend. So, and Wicor is the only one here, and let's check our spreadsheet to see if we already have it. Otherwise, it will be added as well, and we do have Wicor in it. And there is this one that I have not seen, but it was included last time that I did it, EDUC, but I'm not seeing it at this point in it. So that means the industries is ever changing. You know, they are moving from one industry to the other. Probably I'm not seeing EDU in this list, but Wicor is still here. So Wicor is added, and the dividend rate could have been different, and the price would have been could be different as well. So I have 390 by the time that I did it, and the price will be different. So now that we have some stocks, we went through two industries under discretionary. We didn't go through the whole sector. We went through two industries, Broadline, retail, and distributor. So now we are going to move to the next step. So now that you have the stocks that pay relatively high dividend that you are interested in your spreadsheets, now you are going to study those companies to complete the other columns that you have on your spreadsheet to see if they met those other criteria that you set to filter them down. And you can do the research by batches or in batches. So you will first go through one sector. You can choose one industry. One industry might be small. For instance, when we pick Broadline retail, we found 4 companies there. When we pick distributor, we found 1. So you can choose one whole sector, discretionary sector, and go through all those companies, all those industries, sub-industries, and have them on your spreadsheet. So that'll be batch researching those stocks to find those dividend stocks. And it's good to have to note the sector on your spreadsheet, because it could help you later when you are investing in them to see if you are being diversified. So now if you are done searching one sector, you might have multiple companies on your spreadsheet. Now you can move to the next step, scrutinizing those stocks to see which one you like based on the other criteria that you are going to use to filter them down. So now we are going to choose big lot. So that's BIG. So we will go to the top. So now you saw how to find dividend stock, the process to find dividend stock. Now that you found them, you need to know if they are good for you to invest in. The purpose is to invest for a long period of time. So you want to see if they are good enough for you to invest in them. So you will go under research and you will put the symbol BIG. It should be able to bring it up for you. So you will click on it. And it will open the company, and at this point is opening the classic view. So because Charles Schwab has a newer view now to their platform, so just if you have that Schwab account and you are now going in the classic view, the view might look a little bit different. So now that we are under big lot, you can see the industry underneath it as well. So what you are looking for here is the market it is sold on. So if the market it is sold on is OCT, it failed that criteria, you should eliminate it. You should stop there and move to the next company. So you are looking for New York Stock Exchange and NASDAQ. So this one is New York Stock Exchange. You can add it to your spreadsheet. And now you want to look for 52 weeks range. So I'm going to move it down. So we have 52 weeks range. So that means at some point in the past, within 52 weeks of 1 year, 52 weeks, at some point it's sold for $8.11, and another time is sold for $34.03. So on your spreadsheet, you will put um, 8.11 and 34.03. So it will be good to go down and see the dividend rate. It should be, so the dividend rate is 14.23%. Okay, so and it last paid in March, and pretty much if you have one share of this company, you are going to earn 30 cents a quarter each quarter, and for the whole year, one share will earn $1.20, and that's all we are interested in at this point. So when you pick big lot, so far it passed those filters of yours. It's paying a high dividend. That was the first thing. It's paying dividend and it's paying high dividend. So technically it's two criteria there. It is a corporation. That's another filter right there. It's sold on the New York Exchange, a stock exchange. That's another filter that it passed. Now you wanted to see the chart, and the chart will have two things there you are looking for. And what I like to do is go to the chart, and I'm looking for the maximum chart. And one of the two things that you are looking for is the year it went public. It will be on the chart. That's why you want the maximum chart. The second thing you are looking for on the chart is the trend of the chart, the shape of the chart. You are looking for upward trend. You want to see growth. So it's showing us maximum. If you do not have maximum, I don't know if this screen is too small. Let's make it okay. So if you do not see maximum, you might need to click on the drop down menu and select it. So but we have maximum. I don't know if by making it big is too big or what, but anyway. So now let's look at the year 1986. That's okay. So you'll go to your spreadsheet and 1986. So for the year it went public, you need to set your criteria there. What is the latest year that you do not want that anything past that you will say that's a new company you don't want to invest in? You need to set that frame, that limit. So for instance, I could say that any stock that went public after 2000 is not making the cut. So you will set your yours. What are you comfortable in? What can you say that this company has been around for a while? I want to invest in it for a long period of time. I'm okay with it. So personally, I like 1980s. When I say 1980s, is old enough for me. Anything after 2000, I'm a little bit hesitant for that. So, but you will set your own criteria. So this one is 1986. It met our requirement. It passed another criteria. So now let's look at the chart. So how will you qualify this chart? So this I will call it growth and dip. And what I meant by that is going up, is going down, and is very wide. Like the up and down, the gap is quite wide. And how much low it was in 1985, 86. In fact, it started before 86. It's like 1985 that it went, that the chart started with here. 7A 1985. So technically I should put 1985. Okay, it was selling for $3.02, and today is about $8. When it reached $70 at some point, so it's fluctuating quite a bit. So I don't want to do too much study of the chart or whatever is going on inside that company, but I look at this and I will say that's growth and dip. So you will put it on your spreadsheet. So I train this to pretty much 1985, and we can just put growth and dip, and I don't need it in red. Okay, so what you are looking for is a company that pay high dividend that you like, is a corporation sold on the New York Stock Exchange market or NASDAQ market, an old company, established company, and I will say prior to 2000, but you will set that requirement and that show upward trend in the chart. So when you apply that last filter and the trend is growth and dip, is now you will put on your spreadsheet, but it's not something you want to buy just yet. You want to filter. You are looking for upward trend, because by upward trend, that means when you invest in that company, even though your money is there, you are earning dividend, your money is going to appreciate in value. So pretty much the stock is going to appreciate in value. So if you purchase it, you can see the chart, somebody that purchased it at $3.52, and when it reached like in 85, and when it reached $70 in 2021, $3.52 to $70.94, well, that is a big appreciation. So you want a company that is showing upward growth, that you know that is going to continue appreciating in value. But there are some seasonal companies that during some seasons they'll go up, during some other seasons they'll go down. That's something you need to be aware of as well. But anyway, you will have it on your spreadsheet, but you are not going to it's not going to be your first pick. It can become your second pick. For instance, after you invest in all the upward that you like, you can come back again, loosen up your filter to find more companies in your list that pass that flexible filters that you set again, and then you can invest in those. I don't know if that makes sense. So you are setting the filters. You can tighten it up to see the companies that will make through, invest in those, and come back, loosen it up a little bit to see what companies that can, pass those requirements, and can invest in them, and then come back again and loosen it up again and see which ones will be your third pick and so forth. So now let's go through this one called KSS. And when you are batch searching, when you are under the chart, you might even work on the chart. And you can batch do the research here as well. And what I will do is I'll go to the summary, because if something is OCT, we can eliminate it, like not continuing the search on it. So we are going to batch research on this first page first. So we are going to do KSS. And is on the New York Stock Exchange. So it passed that filter. I can just drag it down, and the 52 weeks. So the lowest price was 19, and the highest price was 48.62. Okay. So far it passed that one criteria. We'll go to Nordstrom. So we are just going to copy the symbol here, and we'll go to search. In fact, we can double check the dividend. And the dividend, at this point, if you want to put on your spreadsheet when they pay the last dividend, you can, but it's not necessary because it's quarter. So the dividend is 9.91, and the last time, so they are going to pay in June. So sometimes it will come handy if you have two companies, one already pays dividend and one is going to pay dividend, and they both are on your list, but you want to invest in one, probably the one that's going to pay dividend, you might choose that one. If everything is equal, that way you know that in a month or two you'll have dividend income. So we are going to put Nordstrom's, and we are going to see the market is sold on the New York Exchange markets as well, and how low it went. So at some point it sold for 14.025, and another time it sold for $27.72. So let's see if the dividend is still 5.02. Yeah, and it paid dividend in March. Okay, so now that we have Nordstrom, I believe we have Macy's as well, and that's M. So you see how you are doing the batch research. So we are going to see M as well, and we will record the stock, the market it is sold on, and the 52 weeks low and high as well, and is on the New York Exchange, New York Stock Exchange, and the 52 weeks low high. At some point it sold for 14.48, and another time it sold for 25.12. So now that we have, I think there is another one is Waco. We are going to copy it, and we'll go back. So pretty much that's what you will do. You'll do your search by batch, excuse me, and it's on NASDAQ. Okay, so and you can see the industry underneath it. So we are going to go to excuse me, we have NASDAQ and the 52 weeks low at some point was 19.89, another time it was 32.45 or 6. Okay, so now that we have that, we'll now apply the next filter, the chart, so that we can see the year and the trend. But we can scroll down May, so they are going to pay in June as well, and it's 3.76%. They will pay 25 cents every quarter per share, and that's $1 a year per share. So now let's click on the chart. We'll click on the chart so that you can see the maximum chart. Now from this page, we are going to batch research as well. So for the Wiko, you can name the chart the way you want to name them, depending on how you feel about them. This one I will say upward trend. I could say growth and dip as well, but it's 1980, and this one technically I will say growth and dip. So 1980, let's go to 1980. Yes, we have that, and we put upward for it. I'll leave it like that, but yeah, it's growth and dip, not as the other one, and it does show some growth, and at no point in the past that it went back as to get close to how much it started. That's something I'm looking for in those companies. I do not want them to be going down and as low as how they went public decades ago. So for this, if I like it or if you like it, what you will do is you can highlight that one, either the font or either the cell, or you can put a note in the margin, you know, that you want to purchase it. Okay, and then you move on. That way later when you come back, you can just quickly scroll through your spreadsheet to see the cell that you highlight or the cell that you have notes on, to read those notes that you left yourself, you know, and then take action. So now we are going to check for Messi. So we'll go back, and from this page we'll search Emma. And technically it will keep us on the chart page and just show us Macy's chart. So it takes us back to the summary, and the classic view can do that. But if you are working in the newest view, it's going to keep you on the chart page, and then you can just do the chart study. So if you are using the classic view, then you don't necessarily need to batch work on the summary page and later click on the chart, because it's going to keep going back and forth between the two. So when you put the company's name and you go through the summary, you can just click on the chart and see the chart for that company before you move to the next. But I tend to work on the classic view to find the dividend stock, and then I'll go to the recent view, and let's do this one. We can go to the recent view to see. So Macy's, the chart is growth and dip. So at 1994, probably before 1994, 1992, 1992, is it? I think so. But then the chart is growth and dip. Okay. It won't be my first choice. You have to be aware of it, that it goes up, it goes down. So, and we'll move to the next one. Before we do that, let's go to research, see if it will take us to the newest view. So we are now going to return to the classic view. So from here, let's try Macy's. So this is the newest view that Charles Schwab has. So you can see that the classic view of this page was a little bit different. The 52 weeks low and high was on the right side bar. So that is the newest view that they have for the platform. On this, you will click on the icon for more charts to see the maximum chart, and you want to make sure you have maximum, and we saw the chart. Yeah, is growth and dip. And from this, we are going to move to Nordstrom, I believe, right? So we are just going to search it on top, and it should keep us on this chart page. And if you want to go back to the summary page, you will click on that those arrows back to something said there, and it will take you. But from here, you can just analyze them. So here it starts at 1980, and I'm seeing growth and dip as well. So Nordstrom is growth and dip. And it was 1980. So we have another one, Kohl's. So Kohl's, 1994, probably before that, 1992, and is growth and dip as well. I'm not seeing upward growth here. Growth and dip, and is 1992. Okay, so They all are well before 2000, but we have not seen any upward growth beside that Waco. But again, that Waco, I mean, if you want to compare it to the others that we have seen, it makes sense to put upward for it. But there are other companies that will show better growth than that. So there is not any of those companies that you want to highlight and more them, and you just move to the next industry or the next sector and repeat the same thing. So when you find some that you are interested in, then you'll ask yourself, then you can pick them and invest in them. So how do you purchase a stock? I'm not going to go through that process here, but you want to see the criteria you wanted to go with to see that this stock is the best time to purchase it. So we have those companies here that we record. The 52 weeks low range is a good factor. That's what is going to play a factor in here. But if you did this recording one day and maybe 3, 4, 5 days later you are ready to invest, you should not consider the price and the 52 weeks low and high that you have on your spreadsheet, because those things can change. So let's assume we did our research some while ago and now we want to make some purchases. So first we will see what we found interesting here that we want to invest in. So I'm going to just pick some industries that may not be the one we studied, because the one we studied so far is this one. Let's check this one to see how it's selling right now, to see if that's the best time if you want to invest in it, So we are going to put that symbol back, and since you are on the chart page, it's going to show us the chart. Why not? We can take a look at the chart, and technically from this I can still see the upward growth. And here, when you are ready to buy, it's good to come and check the chart one more time to make sure you didn't make a mistake the first time, especially the year that it went public. So now when you are looking at this, it's showing you that at some point it was 1989 and another time it was 32.45. So it sold 52 weeks low, 52 weeks high, and now it's selling at $26.59. So and the new version, the new platform, or the new layout, the visual layout will try to show you the range. And you know when you see 19 here, you see 32 here, and you see this mark that is close to 32 than it is to 19, you will say that it is not the right time to purchase this stock, because it's close to the highest price that it is to the lowest price. Therefore, you have it on your spreadsheet with a mark that you'll buy it when it's low, and times to times you check on it, but it's not the right time to buy it. So I don't know which one among the one that we invest in, that we recorded here, that if you had to pick one out of them that you will choose. Frankly, I don't. If you'll buy any one of them, it should be after you found some upward and invest in them, that you might want to pick some here and see. So for instance, we have Big Lot here. It's selling for $8.27. It sold for $8.11 and $34.03. So $8.27 is close to 52 weeks low. Therefore, if you want to invest in Big Lot, that's the right time to buy. That's how you will analyze it. Yeah, because you have your filters in place, and you know that if you have a note that you want to buy some of it, maybe it's not your best choice, but you want to have few of those shares, that's the right time to buy. Let's try another one called, that'll be KSS. And coal 1967 is what it's selling now, and the lowest price at some point was 1919, and the highest was 48.62. So the current price is close to the 52 weeks low. Therefore, if you want to invest in coals, that is the right time to purchase it. So that's, that's how you will analyze it. If you are interested in some of those stocks that you have on your spreadsheet and you want to see that's the right time to buy, then you'll go ahead, and after you check the price relative to the 52 weeks range, then you can click on trade and then go through the sales, the purchase purpose. And I will suggest, when you are making purchases, that you have another tab to record your investment. That way, and the reason why I'm saying that is Charles Schwab will show you how much you have in your account, the balance, based on stocks purchase that went through. So if you place an order and it has not been processed yet, because when you are placing an order and you set a limit price, it has to reach that limit price before they will buy it for you. If you want to buy at the market price, then it will buy it right away at any price it's selling at that point. But I like to set a limit price a little bit lower than what is selling, and when it reaches that price, you will buy for me. The Charles Schwab will buy, or the brokerage firm will buy. So when you set that low price and it didn't buy it right away, your account won't show that the real balance. So by recording the purchases you have and the commitment you place as well, you'll be able to know how much you have really on hand in the account to keep placing orders. So I believe we went through our filters. So now let's talk a little bit about a brokerage account versus Roth and versus IRA account, because so we are talking about investing in the dividend stock, and I don't know, it depends on your goal. You have to set your goals, and I will suggest having a Roth IRA is great. If you have a job, you can have a Roth IRA with Charles Schwab or with your brokerage firm. But investing in a dividend stock, you can do that through a brokerage account as well. And the reason why I like that option is this. So let's compare the brokerage account to Roth and Roth to IRA account. So Roth IRA, the government set a limit every year that you should not invest past that. The same thing for IRA account, and it's around 6,000. Could be from 5,000 to 7,000, depending on the age and depending on the year. So for 2023, I think it's around 6,000, 7,000 based on the age. But again, the government said the maximum amount you can invest a year. And if you are earning a certain income, you may not be qualified for a Roth IRA if your income is high, past a threshold. So I'm not going to go through the specific for that. And IRA, the dollar amount is about the same. So IRA account, you invest and it's pretty much before tax money. So on your 1040, you'll have to report it so that it can become a before tax investment for you. So there is a form for that. So IRA is before tax, so that means you are investing before tax money in it, and when you retire, anything that you get out of that account is taxable, including your principal. But the government has an age that you will get money out of that account. The same, and the minimum you are required to get out every year. as well. The Roth IRA, there is an age that the government said that you have to reach that age before you start taking money out, and that money will be tax free. So the money you invest in the Roth is after tax money, your paycheck. So the money is taxed already, but the equity that will build in the Roth when you take it out is tax free. So anything you take out of the Roth is tax free if you met the requirement, the age requirement before you start taking it out, unless you have it for at least 5 years and then you are taking the principal out, you may not be penalized. Otherwise, you'll be penalized. So there are those requirements regarding those accounts that the government has a say in it. As for the brokerage account, you invest after tax money in it, and any dividend that is generating, if you're investing in dividend account, is taxable. Whether you reinvest the dividend or you take it out, is taxable. So the brokerage account is taxable, but the government does not tell you when you should take money out, how much you should take out, at what age you should take money out, or the maximum you should invest in it. As long as you know that anything you are earning in your brokerage account is taxable and you are reporting that income on your 1040, you are doing the right thing. So the government does not have a say in how you handle that brokerage account. A little bit about the Roth IRA. The Roth IRA, yeah, the equity build there is tax free, but if you are investing in LLC companies, the brokerage firm will file a tax return on your Roth for those companies that are LLC. So you will get Schedule K1 from those companies, and you will send it to your brokerage firm at their request, and they will file a specific tax return on your Roth because of those LLCs. So that's why I do not like those LLCs. So that's that. So the brokerage account, when you have your dividend stock investment built into in your brokerage account, you can access it anytime you want. So since we are talking about creating a stream of income through dividend stock, I want that not to have barrier blocking you from accessing your money when you want to access it. So for the Roth IRA and the IRA, the idea behind it is not to create stream of income, but is to spend it all the way to zero. So I don't think they are built for you to create stream of income through that avenue or through those avenues. So, but the brokerage account can give you that opportunity, I would think. So if you want to create a stream of income, because on our channel we share different ways you can save money, different ways you can make money to reach your financial independence, where you do not rely on your employer to provide for your need and your family needs. So if you want to create dividend income through dividend stock, the brokerage account might be a good one, but just be aware that you are going to pay tax on dividends income that you are earning in that account, even if you reinvest them. If you sell a stock at a profit or loss, you will pull that profit or that loss on your 1040 as well. Okay, so now if you are wondering, okay, so I want to create a stream of income through dividend stock, but how should I approach this? How much should I invest? There is multiple ways to go about that. First, you can think about how much you want to earn in dividend income. So how much to invest in dividend stock? So if you set a minimum dividend income that you want to earn from that brokerage account, you need to set a dividend rate as well. So if we say you want to earn $1,000 a year in dividend, and you want to invest in 6% dividend stocks, Then you'll take that 1,000 divided by 0.06. So that is giving you $16,666.67. That's why you need to have invested in the account to be able to earn $1,000 a year at 6%. So that's one way to do it. So if I like to do things long term, that way there is no pressure. You won't feel discouraged. You take your time and do little by little, and it become a routine. So if you say, okay, so if I have $16,000 invested a year, I will earn $1,000 in dividend. So if you want to invest $16,000 a year, you just take that $16,000 divided by 12, and you know that every month you need to invest $1,288. But if you say to yourself, well, in 10 years, I want to be making $1,000 in dividend a year from my brokerage account, then you take that $16,000 divided by 10 years. So that means every year you need to invest at least $1,666.67. So how much should you be investing every month to reach that goal? You take that divided by 12. So that means every month you need to invest $138.89. So if you are investing $138.89 every month in your brokerage account, and you take that money to buy a stock that pay in average 6%, in 10 years you will have enough there to earn at least 1,000 dividend income a year and more, because those dividends that you are earning every month will get reinvested. Does that make sense? So that's one way to do to go about it, to set how much you want to be earning in dividend income, and set the rate that you want the stock company to be paying you, and do the division between the two to see how much you will have invested to earn that income. So another way you want to approach that will be set a monthly amount to invest. So that we went through this already. So set a monthly amount to invest based on your living expense. So that will be another approach as well. Want to make sure and something I like to point out as well, if you want to invest $16,000 a year or $17,000 a year to be able to earn $1,000 in dividend a year, and that broke down into $1,288 to invest a month, and you make a habit of investing that. In 10 years, we can assume that if you are making $1,000 in dividend a year, in 10 years you'll be making that $1,000 in dividend a month, by earning that $1,000 a year for 10 years, and it's getting reinvested with everything that you continue adding to it. We can safely assume, without doing too much calculation, that it will grow exponentially for you to be earning about $1,000 in dividend income a month. Okay, so another approach will be to use your living expense to start with. So that means you have to note your budget, and when you know your budget, you can exclude debt out of it. If you want to pay off your debt, you can take debt out of it and take your living expenses and at 6% and see how much you need to invest for you to generate dividend income enough to cover your living expense. So let's see if we have an example here. We can take an example of budget here, and the total income fixed, I like to call it fixed expenses because it does not, there is some other expenses that I like to call irregular expenses. So we have basic living expenses without debt in it, and then you have irregular expenses. And by irregular expenses, those are expenses that you save for. So every month, some people like to call emergency, I like to call them irregular expenses. So you, on your budget spreadsheet, you estimate how much you think you might spend a year in those categories of expenses. Those expenses that you know you do not pay for every single month, but they might happen at some point during the year. You'll have an estimate for them. And then at the bottom, you total them all and you divide it by 12. And that will give you a specific dollar amount that you know every month you need to put in your saving. And when you have an expense that is in that category, you move that money that you need to pay for out of your saving and put in your checking to pay for it, and you record it under irregular expenses. And by recording it throughout the year, you will compare it to your budget to see if you need to make adjustment for the new year. So for an instance here, $16,000, and these irregular expenses has some layout, some flexibility in it, some little bit of some wants are added to it, like travel, for instance, is added. And so everything total to 16,000 here divided by 12 give 1,300. So that 1,300 is as irregular expenses that you need to save for every month, and the basic living expenses that you need is around $1,090 a month. And for simplicity purposes, we went with $1,000 a month. So if we choose $1,000 a month as your basic living expenses, and another $1,000 a month for irregular expenses, because this one has some wants added to it. But at the beginning, when we are trying to pay off our debts, there are things that we didn't include, and it was around 7,000 or 350 a month, or 7,000 a year. And after we added some, we update our budget every year, to make sure our expenses are lower than the budget, to make sure we are allocated enough for those expenses. So some want are added to it. But for simplicity purposes, we are going to go with 1,000 for living expenses, 1,000 to put in the saving for irregular expenses. So that will be $24,000 a year, or $12,000 for living expenses, $12,000 for irregular expenses. So at 6%. So let's bring our calculator up. So if we take 24,000 divided by 0.06, you need to invest $400,000 to generate $24,000 in dividend income a year. Or divided by 2 will give you $200,000 that you need to invest a year to generate $12,000 in dividend income a year. So if you set 10-year goal to reach 10-year time frame to reach this goal, so that means this $200,000 divided by 10 will give you $20,000 to invest a year. Divided by 12, that means every month you need to invest $1,666.67 every month for 10 years to generate $12,000 a year in dividend income. That is your basic living expenses or your irregular expenses. And if you time it by 2, it will give you $3,333 that you need to invest every month for 10 years to generate $24,000 a year in dividend income. So as you can see, it is your money you are putting to work. So you are going to invest a lot to generate a stream of income out of it. So you are using your money as leverage to generate income out of it and living on that income without the worry about selling your stock when the market is down or we have economic crisis or recession, because stock tends to go down during recession and you don't want to sell your stock, or do some calculation of how much you should sell, not to go too much low in your assets or things like that, but creating a stream of income. But find a routine that every month you can invest without too much pressure, so you can set long-term goal or start with small dollar amount in mind and then go from there. So you can go with living expenses, or you can go with specific expense category. So set monthly amount to invest based on specific category. So you can break down your living expense under different categories and just pick one and work with it. So for instance, if we go back to our budget here, and we are going to pick the phone, if the phone is 1681, we can just pick the phone, or you can just categorize those expenses, or we can just pick the phone. We are going to say $17, and at 6%, how much you need to invest, because you want to, if you are going by specific categories, you can say, okay, so I use cell phone, I use internet, a company needs to be paying that for me. So what company should I invest in for the dividend, to pay for my cell phone bill, or to pay for my internet, or to pay for my cereal in the morning, or to pay for my breakfast, or to pay for my lunch, or to pay for my dinner, or to pay for my travel? So let's take this cell phone, and it is $17. So how much should we invest at 6% to generate $17 times 12? You want to know how much that bill will cost you a year. So 204. So how much do you need to invest in a company that pay you 6% dividend for you to generate 204 dividend income? So you'll take that 204 divided by 0.06. So you need to invest $3,400 in a company that can pay you 6% dividend, annual dividend rate, and you will be generating $204 a year in dividend income to pay for your cell phone bill. So if you want to 5 years to reach that goal, or 1 year to reach that goal, 3,400 divided by 12, that means every month you need to invest 282 or 83, and by the end of the year you have enough in the account. At 6%, you'll be earning enough to cover your cell phone bill. But if you want to do that for 10 years, then divided by 10, you need to, let's do that again, 204 divided by 0.06 divided by 10 years divided by 12, $28.33 a month for 10 years to make 204 a year in dividend. So you just, based on your budget, your earning, you will set those goals. And sometimes you can just go at the macro level, pick a specific category, and when you reach that goal, you pick another category, because you know that, oh, you invest enough to cover those category expenses. Now you pick another category and you say, okay, let's invest enough to generate streams of income through dividend stock to cover those expense categories that we have. You can go that route, or you can go at the macro level and just take your total living expenses and see how much you need to invest within a certain number of years for you to generate income from dividend that will cover your living expenses. I don't know if that makes sense. So if you are frugal and you pay off your debt, you don't need a lot for to cover your expenses. Your living expenses will be low. So how many dividend stock do you have in your portfolio? or how many dividend stocks should you have in your portfolio. I don't think there is a specific number here that you need to go with. I mean, you can go through all the sectors and have maybe 100 in mind to invest in. And once you reach that, you have about 100 different stocks in your portfolio, you might track how much dividend income you are making a month, and then you can fine tune your investment strategy. So let's take an example here. Charles Schwab, I don't know if they logged me out yet, but when you go to Charles Schwab, on the top bar, they should have probably under account, you should be able to see in the top bar, they will have history. So when you click on history, it will show you, you will choose the account, the account that you want to see the transaction history from, and it will show you the dividend that you earn in that account, or the stocks you purchase in that account, and it gives you at the top the option to export, and you can export as a CSV. And when you export as a CSV, you can save it on your spreadsheet, and you can pretty much design your spreadsheet to pull dividend that you are recording, that you are exporting from Charles Schwab on a monthly basis on your spreadsheet. And when you do that, you have the symbol and you have the month. You can total those dividends by month, and you can, because most of those companies, they pay by quarter. When you have, let's say you assuming that you invest in those companies before January, so when you take the first quarter, January, February, March, that's one quarter right there. So you just need those that first quarter to analyze. And as you look in this example, we can say that the first quarter, not the first quarter, but the first month of the first quarter, the dividend income is low. And the reason that we didn't invest in most companies that month, but still, let's assume we did. Then when you have this, you look at the 3 months of a quarter, the first quarter, the month that is low, then you'll ask yourself, what are the companies that pay me dividend this month? So for instance, January, companies that pay dividend in January, chances that they will pay you again in January, February, March, April. And the one that pay you in February, will pay you in May, and the one that pay you in March will pay you in June. So the one that pay in January will pay in April. So you can see that, because I say we didn't invest in a lot of them in January, so you can see that April, the dividend income is higher than January, but still is on the low side. So now by looking at this, you will say that, okay, so because if you are earning dividend the first 3 months of the year, that's one quarter, chances are throughout the year you are going to earn dividend income every month of the year. So now that you have about 100 stocks in your portfolio, if you like those companies, you don't need to keep adding new ones if it's hard for you to manage them all. If you have some in your spreadsheet that you are interested in, you have not invested yet, yes, you can go check them to see if that's the right time to invest in them. Each time you have money to invest, to see if the 52 weeks low and high, the price is close to the 52 weeks low for you to invest in them, or if you need to wait. And yes, you can invest, you can add more stocks to them. But if you think you have enough stocks on hand and you want to just keep reinvesting in those companies, then you'll ask yourself, okay, so what are those companies that are paying me in January and see those companies. So they pay in January, they'll pay in April. And then you can see if you like them enough that you want to invest more in them. Then you can now, check them out to see if that's the right time to invest in them. So let's take an example, and then when you are done with that, you can check, you can when you raise that monthly dividend income, then you can pick the next month that is low. In this one, that is February, to see companies that are paying you dividend in that month, that when they are low you can invest in them. Does that make sense? You can use that strategy so that every month you are earning relatively high dividend income. So let's take an example here. We have BNS, and when you are doing the research, you can take notes. And in this example, when you are taking notes, the month they are paying dividend might play a role in your decision, because you are looking for dividend companies that is going to pay you dividend in the month that you are already earning a low dividend income. So if you want, we can take this BNS. If the stock that they have not logged us out, and that's a Canadian company, and it is on the low side. $45 is the 52 weeks low, but it's selling for $58 compared to $68 is on the low side. And the dividend rates is 6%, and they pay in April. So that means if we are earning low dividend income in January and April, and it's on the low side, and if we have money to invest now, that'll be a good one to invest in, because in April, the first quarter, the first month of each quarter, we will earn a low dividend income because we didn't invest a lot in those companies. I don't know if it makes sense. So, and we can take a look at the chart. 1996, still before 2000, and yeah, it does have some is growth and deep, I will say, but you can still see some growth in them, because at no point they came close to the lowest price they start with when they went public. So there is growth to it. So that's that. And so yeah, you can fine tune after you reach a certain number of stocks in your portfolio. You might want to expect earning dividend every month, and based on that, based on your analysis, you can now choose, you can now invest strategically by investing in those companies that you are interested in, but just based on when they are paying their dividend, so that you can invest in the one that are paying you dividend in the month that you are already earning low dividend income, so that throughout the year you are earning dividend income. Okay. So yeah, and I think, let's see if I cover everything here that I want to cover. Yeah, so pretty much, yeah. So if you are interested in investing in dividend stock, you can do that if you have a good brokerage firm that you like. Yeah, you can do that in it, but by seeing if you do not know how to access the sector and the industries, with that company, that brokerage firm, you can, search them, and when you watch our videos, you're interested in a specific companies, you can just take note of those symbols and search them with your brokerage firm to find them, analyze them, and if they met the car, you invest in them. So, and the goal of this is to invest in dividend stocks with the objective of generating a stream of income through it. So there are different ways to generate income, and if you have a job, it's good to live to spend less than you make, so that you can put the rest to work. That way you won't have to keep trading your time for money. So by investing in dividend stock, you are trading your money for money, and you will need to invest a lot to be able to generate a lot over time as well. It's not get rich quick anything at all. You can see the calculation we did together, and there is different way to generate income through stock investment. You can trade as well, and we are not talking about trading here, we are talking about investing in dividend stock. So if you want to trade stocks, you'll make more money faster, but the strategy is different. What you'll be looking for is to pick the stock is different. If you're investing for long term, some people invest in tech. There are the examples that they won't usually pay dividend, or they pay very low dividend, but they increase in value. So you invest in them, the value of the share will increase over time, and when you sell it, you will make a lot of money. I just don't want to invest in companies that my money will sit down there for decades with the goal that when I sell it, I will make money, a lot of money out of it. Yes, you'll make a lot of money out of it. I want to generate a stream of income through my investment from day one when I invested, and then when I sell it, it will have increased in value for me to make a large profit as well. That's why we are looking for upward growth of the company stock chart. The upward growth is showing you that it's increasing in value. The stock price is increasing in value over time, and paying you dividend is an income you are generating from it. It's like having a rental property. The property of the house, the value of the property will increase over time, but you are generating rent income from that property as well, instead of having a land sitting and the land is increasing in value, and when you sell it decades later, you'll have a profit from it as well. So there is difference between the two, and it's up to you which method you like better, or you can even do a combination of the two. You can trade, and you can invest in some companies that is going to increase a lot in value but does not pay dividend at all, and you can invest in dividend stocks as well. But if you are trying to generate income from dividend with the goal to cover your living expenses, sometimes when you focus on one objective at a time, it might get you faster to the result than if you are allocating your saving that you want to invest, your money that you want to invest. If you are allocating in different buckets, it might take time for each one of those buckets to reach the goal you set for them. So thank you so much for watching. And again, you can set a long-term goal so that you can break it down to what you should be doing today to reach that goal. That what you should be doing today is now does not put a lot of pressure on you. That way it's easy for you to invest every month and just make a routine of it. If that's $200 you come up with to invest a month, and you know you can afford $200, then it just become every month $200 you reinvest it in dividend income. Does that make sense? Something like that. Make a routine out of it. How minimum you can afford to invest easily, that you can make a routine out of it, and you do that, and over time it will grow when you stay consistent doing that. So thank you so much for watching. I'm Afiavi Liberman, creator of Liberman Consulting L.L.C YouTube channel, and in asop.com, our blog. Thank you so much for your time. We thank you very much, you all that subscribe to our channel. We thank you very much for all your comments. Thank you for your time.